Trainers, I get this question a lot. If I'm primarily a competitor, how do I position myself as a business with the intent to make a profit? It's a great question because the IRS makes big distinction between being a hobbyist and running a business. And if they label you just as a hobby, you lose out on valuable deductions. So today, we're diving into how you can position yourself as a competitor to show that you're serious, you're organized, and you're here to make a profit, not just to catch them all for fun. Alright, let's talk about the test the IRS uses. They don't just flip a coin and decide. They look at a series of factors. Think of it like a gym leader checking your badges. You've got to prove that you've earned them. The first factor, are you running it in a business-like manner? This means, are you keeping records, separate accounts, maybe even a budget? If you're just keeping mental notes, this leans hobby. If you've got spreadsheets, receipts, even QuickBooks, that leans business. Second, time and effort. If you're traveling, competing, training, building strategies, that looks like real commitment. But if you're only entering one tournament a year because it happens to be in your town, the IRS says that's more likely a hobby. Third, do you rely on this income? If your prize winnings or sponsorships help pay rent, bills, or buy gear for you, that matters. If it's just side cash for Pokecoins or cards, that's fine, but it won't look like it has intent to make a profit. Fourth, profit track record. Even if you're not profitable yet, showing that you've had profitable months or seasons or that you expect to be profitable in the future is huge. To this point, the IRS is asking, are you treating it casual like a Magikarp splash or like a competitive Dragonite ready to sweep? So let me ask you this, trainers. Do you think the IRS would consider your Pokemon activities a hobby or a business? Drop hobby or business in the comments below and I'll be checking out your answers. So how do you actually show you're serious? Let's break it down. Step 1, separate your finances. Have a separate bank account, even if it's just a small business checking account. That way, your prize money, your sponsorship income deposits don't get mixed in with your grocery runs, Netflix subscriptions, and it shows the IRS that you're organized. Step 2, keep records. Track your travel, tournament fees, your equipment costs. Think of it like your Pokédex for deductions. You don't want to miss anything. Even if it's just a notebook or in an app, showing you've got receipts and logs, that really matters. Step 3, create a business plan. This doesn't have to be 40 pages. It could be a one-pager. Maybe write down, here's how I'll earn income through prizes, sponsorships, maybe in YouTube recaps. Maybe we do a league night coverage. Here's my budget for tournaments for the year. Here's how I expect to grow. This shows intent to make a profit, which is very important. Step 4, market yourself. Have a social presence. Maybe you do recaps of local league matches, breakdowns of practice scrims, or even prep guides for regionals. Sponsors want visibility, and creating content around your journey proves that you're serious. Step 5, consistency. If you show up regularly, competing, and creating content around the competitive scene, that's stronger than one-off appearances. Think of it as logging in every day for your daily streak, except the streak builds credibility with the IRS. Now, here's where it gets really interesting. The IRS and the courts have seen this issue before, not with Pokemon trainers, but with professional gamblers and people in sports like horse racing. The big case is Groetzinger versus the commissioner in 1987. The Supreme Court looked at a guy who was gambling full-time, 60 to 80 hours a week, no other jobs. He was trying to make a living off of it. The IRS originally said, no, that's just gambling, that's not a real business. But the court disagreed. They ruled because he pursued a continuity, regularity, and genuine intent to make a profit, it was considered a trade or a business. That's the model you want to follow as a competitor. If you show up consistently, if you track your income, if you're trying to grow, you look more like Groetzinger and less like a weekend hobbyist. On the flip side, the courts have shot down horse racing enthusiasts who claimed huge deductions. Why? Because they weren't really trying to make a profit. They just liked owning and racing horses, and their losses piled up year after year after year with no plans to turn it around. And the law that governs this, it's called the Hobby Loss Rule, Internal Revenue Code Section 183. It basically says, if you're not in it for profit, you cannot deduct more than you make. No using your hobby to create a giant tax write-off. So in short, the IRS is not going to accept you're building a business unless you can prove it through intent, structure, and documentation. Just like the gamblers and horse races, you gotta show you're more than just a fan, you're a professional. Let's make this real with some competitive Pokemon examples. Say you win $2,000 in prize money in a year. Awesome, but your travel, lodging, and entry fees add up to $3,000. If you only report the winnings, the IRS might say, hey, this looks like a hobby, you're losing money. But let's say you also create content around your journey. Maybe you share practice tournament highlights, do recaps from your local league nights, or make videos about how you prep for regionals. On top of that, a sponsor sends you gear worth $500. Now, your activity is bigger than just official competition. You're building a business around competing. That's much easier to defend. Now, let's get specific. Imagine you're heading to Las Vegas in November of 2025 to compete in the regional for the 2026 competitive season. You spend $2,000 on flights, hotel, and meals. You also enter the regional, which is legitimate. But if all you do is play a couple matches and lose early, then spend the rest of your time on the strip, the IRS isn't going to buy that as a business expense. They'll see it as mostly a vacation. On the other hand, if your primary purpose is the regional, you register, you prep with your teammates, you do a recap video when you get home, maybe even meet with a sponsor, that's much stronger evidence that it was a business trip. The key is, you need to show that the trip was centered around your role as a competitor, not just a tourist in Vegas. Here's where a lot of trainers drop the ball. Documentation. Documentation is like your shield against Team Rocket. If you're sponsored, keep the contract. If a local store gives you $500, make sure you've got an email or an invoice to document it. If you buy travel for a tournament, keep the receipt. Jot down what the trip was for and why it was business related. Even if it's a quick note in your phone, just like travel to Vancouver Regional for Pokémon Go tournament, March 2025. It can be powerful against the IRS. Because here's the truth, when the IRS audits, they don't care what you say, they care what you can show. And having that paper trail makes you look professional and legitimate. So here's the bottom line, trainers. If you're primarily a competitor but want to position yourself as a business, focus on intent, structure, and documentation. Separate your finances, build even a small plan, show consistency, keep records like a pro. That way, if the IRS ever challenges you, you'll look less like a casual player and more like a gym leader running the real operation. If you want to go deeper, check out my videos right here on what deductions you can actually take when traveling to tournaments. Remember, we're here to help you count them all and keep it all, legally of course. See you next time.